With the earnings season just around the corner, what are markets expecting of this time's earnings? In an exclusive conversation with Meera, Sanjeev Prasad of Kotak Institutional Equities and S. Narain of ICICI Prudential believe that it would be a tepid quarter. However, there will be some exceptional performances.
We bet on a few private upstream producers who are going to get the benefit of the dollar-rupee benefit and who don't have the problems of subsidy. Having said that, I think we have to give credit to the government for whatever they've done in this sector in the last 1 year. Surprisingly, the market has not given any credit because maybe the market believes that the credit will be backed by a future debit, which can't be assumed at this point of time. Because go back 1 year back, I don't think any of us expected a 7 rupee increase in diesel price, gas price increase, continuous changes in petrol prices, up and down as it happened. So, all these steps are exploration permissions being given for some companies. All these steps were done beautifully in the last 1 year. The market has just not moved in the sector. Valuations have become much cheaper in many of the cases. And the market seems to implicitly believe that there's a debit following the credit.
Well, at times it's happened on the same day, Sanjeev, but so what's the call? I mean, a lot of people say that the changes that happen are tailor-made for Reliance Industries, but without getting into what happens for RIL in the future, this quarter, what do you think the big boy does?
Well, so as far as Reliance is concerned, on a YOY basis, it's going to be a decent quarter because refining margins were actually quite weak in the first quarter of last year, about $7.50 a barrel. This year we're looking at about $8.50. So on a YOY basis, at least we see an improvement as far as the profit is concerned. We are looking at about 51 billion rupees of net profit. But on a Q-on-Q basis, there is a decline in refining margins for about $10 a barrel in the fourth quarter of FY 2013. So compared to that, you will see about 8% decline in net profit for Reliance. Coming to ONGC, which is where the big disappointment is going to be, because the government of India, in all probability, will continue with a $66 a barrel discount for upstream companies. Crude prices have come down on a YOY basis, which means effectively the net realization for ONGC will come down to somewhere about $40 a barrel as per our calculations compared to 47 in the first quarter of last year.